The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, this is Basil Chapman, Tiger Technicians Hour on this 17th day of April. My pleasure to be here after an incredibly stormy and miserable day yesterday for the marathon runners, Boston Marathon. Now I can see why there were so few people standing on the sidelines. Of course, all the different cities along the route had barriers, an incredible amount of activity planned for today, for yesterday. But the weather just really was dispiriting. But the running was incredible. Just even to finish the race was quite a feat. And congratulations to everyone involved. What I do want to say is that in the marketplace, I've been saying that if the Dow goes above 24,600s into the 24,700s, it frees up a bunch of left side resistance, and for the first time the cup formation could begin an acceleration. It could be an acceleration intraday, as I said to my subscribers to my opening call. Well, we're at 24,831, up 258 right now. In percentage terms, each day, although it's been higher for quite some time, maybe 1, 2, 3, 4, 5, 6, 7, 8. So out of the past 8 sessions, 6 days have had higher highs. This is the biggest breakout that you can see. You can see it here in the E-mini from the close of the previous day. That's really important to me. And what it's saying is, and I was asked the question, I believe the implication was, what would change my thinking that we need to retest or break the low that was made on the 9th of February? There are a couple of things, and let me go through them right now. In fact, let me do this. I'm just going to run all the numbers. The E-minis up 25 at 27.07 in a very strong leg B. I've now got this as a blue B. In other words, not a great B, subordinate to the major high of 28.07 back in March at the peak, that last peak D. No, this is the stochastic is at 84%, above 80%. That's very good. The MACD is expanding. This says that we should get at least 4 higher peaks in a buy mode. It doesn't say that it should go to all-time highs. It doesn't say how high. It just says higher peaks. And this is still a leg B. You still have to make a peak B. Then you have to make a leg C, then a peak C, and then maybe a D. Not only that, the arch formation is more appropriate for the weekly chart and suggests that there will be a lot of pressure in the 27.12 to 27.28 area if it can get there. On a very short-term basis, the E-mini is in I'm calling this leg F for now in the 120-minute chart, but at 27.06, 26.95 to 26.92 will be key support over the coming 2 sessions. Let me get out of this and show you a couple of other things here. Now we'll go through the numbers. As I said, the Dow up very strongly. It's up at the above the gap. That to me is really important, and that's one of the reasons why I've been hesitant to say that the move that we're seeing, although the technicals were very strong, the price was not moving commensurate with the technicals. Now we've got to catch up, and that's very important. To come back to the median or to come back to some kind of an average, you would expect that something's got to give. Either the price is going to stall and then the technicals will fail, or the price is going to catch up to the technicals, and that's what's happening. And you've broken at least the resistance I noted here in the arch formation. In fact, this arch formation now is giving way to a cup formation, and that's now. Let me get back to the question. We'll deal with them one at a time. Very good question. The question is, what would change my thinking about that? And my thinking is this, that if you look at the arch formation in the weekly chart, there is a precedence for this kind of pattern coming off a pretty serious top. And what I'm looking at here is, if you look at the GLD, this is the gold chart back in September. Let me just get to it. September of 2011 at 185.85. There was an H pattern that went down from the 185 high to the 148 low. That was in 2011, maybe it was November or December. Then it bounced up, made an A, which became an A minus because it came back down. But 148.27 was the low on the left side. The right side, H pattern had 148.53. Then there was another rally. That rally didn't go above the high that was made immediately after the very first little tiny H that was made in the GLD back in November of 2011. The high was 175.46. In the arch formation in February of 2012, we went to 174 round number, pulls back to 148.53, and then bounces to 174.07. So it went 7 cents higher, made another, that's the M formation. Lowercase h goes to an M formation, and then it broke down with a Chapman wave Roman candle, and it was down, down, down ever after that, right until it got to 100.23 in December of 2015. And now it's been making higher highs, but no real breakout at this particular point. So the pattern is this pattern here. And now what I'm going to say is, as it stands right now, I don't expect a lowercase h to go to a lowercase m and then break and have like a one-to-one to the downside. And I'll explain what I'm looking at here. Going to back to the Dow. Let me show you the what I'm really looking at. The MACD has gone to 84%, and the MACD is very strong, and the histogram is at plus 106. The stochastic is at 84.74%. That is very good, above the 80%. It hasn't flattened out yet, but this is still very good. And that's suggesting to me that the Dow should try for the candle of the 21st of March at 24,977. And I suspect 25,000 is in the cards. Just in that area of 25,000, that's the next big focal point that I have. Let me go through this carefully to show you that the MACD in the weekly chart is, in the Dow is okay. It's not great. It's flattening out. The stochastic was turning up, but it really didn't have a wide differential between the 9-period moving average, the green faster moving average, and the red one. But now you do have it, and that's saying there's some torque to the upside, even though it's a weekly chart. And that suggests, once again, that now we've got the potential for the lowercase h going to an M. The big question is this now a major cup formation that has broken from the low that was successful in the S&P and the Qs, because it never went even close to the 9th of February lows, and then we've started the cup pattern to the upside. Forget about the lowercase h going to an M. Here's my answer. My answer is that the strength that we're seeing in the Dow today, having pierced the 24,700s, gone to the 24,800s, is suggesting to me that there's now, of all the bad news and everything, we've survived that. At this phase, there's tremendous support in the February lows.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, Ron. We're back. Excuse me. That old voice. Here we go. So we're up now 256 points in the Dow, 29 points in the S&P. We want to go to Mike at Ormond Beach. Mike, how are you?
Doing pretty good, Basil. I'm looking at the QID, and do you think it might be ready to nibble on a little bit, like today or soon?
So, okay, let me just go through this. We were fortunate in being short. This is the subscribers to my opening call. Less than a point from the all-time high of the QQQs. The high was 175.21. We got short that very morning just before the bell, and within an hour it made its high, so we were within less than a point of the high, and we ran down, took some profits on the way down, and this time I thought we'd try to hold as long as we could, but we did get stopped out this morning, so this morning's the remaining portion was about a 16% profit. Now I'm looking at it, and it's in leg C. Here again, I have to consider the strength, not the MACD and stochastic. I have to consider that the strength has to be. I have to place an up arrow at the bottom of the low that was made at 153.88. We're at 165, 12 points higher. I'm calling this a leg C. We've gone into. Let me just check this out. We haven't filled the gap. The gap is from the high of the low of the 21st of March at 166.19. The high today is 165.86. I suspect that that's going to be filled. So the question is, will there be a reversal? And the stochastic's only at 70%, it's not 80%. So technically, I shouldn't put the up arrow. I have to because of the gap up today in leg C, tackling all that resistance on the left side. I think there'll at least be a leg D to come this week. So to answer your question, I would wait on the QID.
Okay.
What has changed for me is that the stochastic never went to the single digits. I had thought, and I'm still of the opinion based on the SMHs, which we are still long, the SMHs, the semiconductor index, I'm looking to see when they stall, because the SMHs are really important in relation to what the QQQ is doing. And if I get a clue that the SMHs have run out of steam on the upside, that's where I think the Qs will be more vulnerable. I would say that you've got, and right now, if you said to me, would I short, I'd say, I think we're very close to at least a little bit of an intraday pullback. But I would hesitate with the technical strength. And you see, the other day we were looking at the prices stalling, even though the technicals were running. Look at the way the stochastic has gone from, let's see, it went down to stochastic. So the stochastic went down to 14% and is now at 70%. And yet, you've got, today's the first day you've got a commensurate move that's, I always think I'm a clarinetist, I'm not a professional player anymore, but I used to be. And I always, when I was teaching, I would always say, the amount of pressure that you use, the amount of torque or energy or momentum, you should hear exactly within a few percentage the vibration of your reed on the clarinet to give you that sound, so that if you're pushing 2x, you should get about 2x worth of sound. If you're pushing 3x, you should get about 3x worth of sound. As soon as you back away, it should come down. What I was looking at up until yesterday is that, boy, yeah, you saw this technical strengthen, the MACD had turned positive, and all it was doing was walking the 9-period moving average. The Qs were already acting very, they were lagging, and now they've caught up. And I think the catch-up has another couple of days to go, and then we'll look at it. But now what I'm looking at is that the rising low of 150.13 to 153.88 3 weeks ago, I think we're looking at the 150, I would say the 155 to 157 area is really going to be the support level that I'm looking at over the coming weeks, because what we've seen over the last few days, especially what we saw all of last week, I think you could concur with me, that all the news events that saw those very sharp sell-offs in the morning or even later in the day were just in a trading range. They felt terrible. And the fact that we survived 3 pretty serious political, socio, and economic news-related, really bad news tsunamis in terms of news, the market just shrugged it off and said, you know, yeah, we can handle that. So now it's going to take it's going to take more economic news, maybe talk of maybe a recession or whatever it is that they talk about, or interest rates. Other things are going to happen now. And until that happens, I think you've got a bias of support and some upward momentum. So my answer is to the question I had yesterday about the market. I think that the low that was made in February the 9th is going to take a plethora of really negative and sustained news, with the VIX not trading now in the 15s, back in the mid-teens, but back in the 19s to 21 area for the market to really pull back sharply. So my answer to you is I'd hold off on the QID, even though, you know, on a short-term basis, near-term basis, let's say over a 6 to 10 hour period of market, yeah, you could get the pullback. I think too many people now are going to have to start to cover short positions, and that says that there's some support. I hope that answers your question in a way that you can look at it fundamentally. Also, at 165, if it pulls back, if it closes under 164.80, then perhaps it could be a little bit deeper pullback, but I still call it just a pullback intra-week, more like a couple of days or a day and a half of a consolidation. I think there's a little bit more buying pressure still to come.
Another question that's related to this, do you think at this point, after what happened today, that we've seen the residual low of the markets, or do you think that still is yet to come?
Yeah, now what I said is it's usually, it used to be a 6 to 8 week period before you get the residual low. That changed over the last few years. Also, we haven't really had an internal low with a residual low for quite some time. So to answer your question, the way I'm looking at the Qs right now, I had said that I thought there'll be a series of lows that come in. They might be higher, they might be lower, but they'll be going down towards the 200-period moving average. In the Qs case, that's at 154. Now I'm going to say to you, I don't know what it's going to take, because if you look at the bank stocks, the banks have usually held very well through this whole period. Now they're not doing so. Goldman comes out with earnings today,
Right.
and it was sharply high, or quite about 2 points higher. Now it's lower. So it's a real mixed market. But as long as there's a rotation going on into the sectors that people want to buy, if I look at my Dow Quartet, I looked at them last night. GE wasn't acting very well. IBM has news after the bell, so I think it's after the bell today. That might impact it, but it wasn't acting very well. Triple M wasn't. It was acting terribly, and United Technologies wasn't. So this is very, in a way, it's stock and sector specific. And what I think I'm looking, look at Triple M, it's probably up. Yep, it's only, now it's up 374. Nice move. So I'm looking to see, is there now the start of a cyclical move in these laggards like United Technologies and Triple M? So to answer your question, it's rotational. And because it's rotational, we might not see a low of the February 9th.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We'll go back to the numbers in a moment. Just a quick thing in the den about FSM, Fortune Silver Mines, Inc., trading at 576, up 13 cents. You have leg D in the daily, has very strong 552 support to 541. Excellent action, and the technicals are confirming it's just a tad overbought. I'm saying a tad, and that's why I mentioned the support level. Weekly chart is in leg A, B, leg C to the upside. Monthly chart is in leg A, B to the upside. Hey, good eye, very nice choice there. Okay, so let's go back to the story that we were looking at. You got the Qs right now. I forgot the S&P, but we'll go to the Qs. We're up 3.34 at 165.95. Part of this, of course, is Netflix. Netflix came out. The money side of it was not that spectacular. What is spectacular is I think they had a huge increase in subscribership. I know I landed up, my wife wanted to join Netflix, so I did. I have these different services, and I still can never find anything that we like. Anyway, so at 337.54 up 29, gapped up to an all-time high. This is very important because the MACD is good, not great, and the stochastics at 76%. If this holds into Tuesday today, if it by Thursday afternoon or Friday at noon, if Netflix is above 334, more likely, and if it's already intra-week at 343 and is holding the 334s, I would have to say that that's really good action. If at any point in the next 2 days it gives back and goes under the gap up opening of 329.66, that's going to be very negative action. So far it looks good. Technicals are good all the way around. So now let's go to had a lot of questions. I'll deal with it right now. Goldman Sachs down $3 at 254.81. For subscribers know that we've been looking at this as a potential buy for later on. And I try to have patience. I just sat on the sidelines. It looked like leg C. If there was a good earnings report today, it could go to leg D. If it held very well in leg D, you could even tackle the candle in March, a high in the 267s. Well, it's down. It's at under the 9 EMA. I'm thinking that Goldman Sachs is telling us the financials. This is what I'm trying to say, that because of the rotation, I spoke about this earlier, it's the reason why I have a stop on the QQQs, even though technically the vehicle that we've used, the 3 times short, is not even close to where it was the day that we got in. The way it erodes, it's not the best vehicle to hold for a long time. So I'm thinking that we have to let this week play out. It's probably the following week or going into the first week of first week of May. It's going to be very important. But as it stands, as long as there's a rotational correction, look, the XLF is up 16 cents at 27.73. Bank of America didn't come out with earnings. Yeah, look at this. It's up big, 32 cents to 30.25. I mean, we were in it, we're out of it. I just didn't want to hang around. It looks to me like the financials are still under some pressure and need more time. I don't think they're necessarily going to break down, but I think they need time. That's number one. Number two is, look at the steel stocks, SLX. Steel stocks up, SLX is A, B, this is a leg D. It's filled in all the gaps and all the ugly action that was late March. But it's not fantastic action on the technicals and the weekly, yet the daily chart has managed to get to a nice signal that says, hey, we're back in play. We aren't acting great, but we're acting well. There's a big difference. So we could be holding support if there's a rotational correction. Now, out of steels, there's a little bit of money into steels. If we go out of steels, you just say, let's go look at the IBB. What's the IBB doing? IBB, Biotech, NASDAQ. Nice candle today, up 225 at 174, leg B. I don't yet have a buy signal. I don't have an up arrow, but it is nice action. So do you see what I'm saying? That if we rotate through the different sectors, you don't have to go crashing down to the February 9th lows. You could have a correction of time. And I'm saying that within 1,000, 1,300 points of the low of the Dow, I don't mind having to go long based on the technicals in the Dow at this particular point. I don't think you've missed out anything, because if it is going to be, if we've made the low, that is the residual. That was the question that was asked. That was asked by Mike in Ormond Beach, Florida, and it was asked yesterday. Kevin asked. Basically, the question was, have we made the low? Was that it? And my answer is, if you go to certain let's go to certain sectors like Schwab, nice candle today, up 50 cents at 53.58. IBKR, I think it's KR. Yep, This is Interactive Brokers. Yep, there's your leg C at a new recovery high. Oh, it's a new all-time high. That's saying to me that money is still flowing. It's not flowing out of the brokers. It's flowing into the brokers. Ameritrade, AMTD. And it's very important for me to assess this. At the same time, you've got to do your own individual homework. AMTD, I think it's Ameritrade. There it is. Yep, A, B, C, another leg, D or E. Yep, the leg E. In the daily, the weekly chart made a F/B, holding very well. So this is saying to me, hey, yes, 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 there's a rotation going on. No, no, no. It isn't 90% of all the different indices just screaming to the upside. The HGX, the housing sector index, right now is trading at, it's up a little bit, but it's still not a very particularly good pattern that we're looking at. It's improving. So I'm saying to you, there's a rotation going on, and that rotation says there are enough stocks that could really move the markets higher. So now let's go back. We want to look at the IWM. The IWM right now is up 1.50 at 156.87, up 0.97%. Dow is now only up 0.86. S&P is up 0.98. So what we're looking at here is this rotation is seen very clearly as the IWM has made a much better retracement back up than the other indices. And that monthly chart is the one that I keep my eye on. So the answer is, if we make a rotation like this, then pullbacks, at least in the short term, should find some support. I think there's just enough oomph left to go a little higher. I think it's options expiration week. So yes, we could still see some upside bias. But at the same time, that H pattern that can go to an M pattern is really what I'm looking at. But it doesn't mean to say that there are some stocks that you can buy now that might not go back to those lows if there is a rotation or correction that keeps going. We were unfortunate. There's a stock I wanted yesterday. We just missed buying it. It ended up jumping 6%. I had another stock that I was going to put on, and then I thought, I just need to wait a day. I'm not sure, so I left it out, and I'll show you what it is right now. It's GWPH. Had it on the list for quite some time. Finally, I decided we wanted it. I did the analysis for it. It was right here. I said, I think I need a pullback. Ugly candle yesterday. And what happens today? It jumps from 121.34 to 136.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, everyone. We're back. So gold is down $3 at 13.47. What's really interesting for me in terms of looking at gold is now you've had a little bit of catch up in the gold stocks that were, most of the time they've acted quite poorly on these big bounces. This last time there's a little bit more belief in the move up. I'm still watching it very closely. all this particular period for maybe, months now, I've been saying I suspect that gold is in a trading band. I don't think it's going to break down, but I don't yet see it actually breaking out. That would be above 1380, and it's trading at 1347. But I am becoming more fascinated as I'm looking at global activity comments rather than actual activity, and how it's impacting gold, at least to hold quite well here. So I'm just saying parameters to watch: 1340 to 1337. Probably the near-term support that has to hold. Any move above it's at 1347. Any move above 1357, 1361 suggests, maybe now it tries to go for that leg D in the daily chart. But at this point, it's just holding very well. Remember, we looked at silver. I said silver's action yesterday was much. At that point, it was actually acting quite well, bouncing off the 9-period moving average. Did it again today. Gold is up 0.08 to 16.76. I'm thinking that silver is telling us a little bit more. This is more the action that I've been anticipating. I would like if I saw it, and I do see it. I like it, but I don't think, you see, there's a chance that you can call this a cup formation. I prefer to say, yeah, there's a cup formation, but if you look closely enough, all you've got here is a rectangle, and a rectangle formation can last a lot longer than your patience. And what you want to do with a rectangle formation, until you're proved wrong, you want to be buying at the lows, in this case in the 1620 area, and selling or shorting, or at least getting out at the 16.80, 16.90. If it goes to 1720, something else is completely different. Now you've got to start counting the peaks, and we've got A, B, we've got a peak C in the daily chart of silver. That weekly chart is actually starting to improve, and as a result, I'm going to be taking a much stronger look at the silver whole gold and silver area. I don't know yet whether I want to buy, because now I'm thinking if I do want to buy, I really would like to put a position on more intermediate term. I don't want to be in and out, in and out. Gold is something that you really want to have a longer term perspective, or really short term. In between, I think it's just too choppy. It's that gold. I want you to go to the HG, which is copper. Copper right now is still stuck in that range. I just make it clear. Above 315, very good action. Below $3.02 to $3 support, not good action. Just keep it as simple as that. What do you need to see in the weekly close on gold and silver? Let me give you that. It's a very good question. Hopefully, I would be in it if it's going to go there. But I want to see gold trading in the 1373 area for at least 3 to 5 days. Then I think we've got something completely different. We haven't seen that for a long time. That's a breakout. On the downside, that's kind of 353. It's only about 7 or 8 points higher. However, 373, I'm sorry, should have said 373 is 28 points high. So it's quite a distance. And on the downside, if it breaks 1330, not back to that trading band, that's all it is. Silver on the, I said 1725. Yeah, just above 17, and at least it closed there, maybe 2 out of 3 sessions. Then I think you've got yourself something really a lot more serious on the upside. Hey, let's go to crude oil. Crude oil is the one that we've been following because it made that peak that I said has the potential for a Chapman wave. This is the one that I call the double camel hump. Boy, these expressions, I'll probably have to update them. At least it looks like an M formation, right? The right side of the M is being formed, and if that fails, it'll fail if crude oil at 66.23 up 1 right now. It fails if it closes under 65. Then it says it's going quite a bit lower, and it's very positive if it trades at 68.30 or higher. And right now, as I say, 66.23. 2 points up, or 1.5, maybe 2 points down. 1.5 points down, I'd say there's something going on in directional change. Now, let's see, question came in. Raytheon trading in leg D. Now, this is going to be very interesting. This is a leg D, a red candle, nothing serious except of the extension that it's had. It's had 1, 2, 3, 4, 5, 6, 7, about 7 or so days of a continuous single leg to the upside. Almost looks like a leg A. And what I did was I made this an A right here. This is a B. What happened? A, B, overlapping wave. Oh, that was wrong. This is a C. This is a C. Oh, that's good to know. Okay, so that is a C in the daily chart, which says it should go a little higher, but the MACD is at 91%, very strong, and the MACD is very strong. The stochastics at 91%, very good. And it's in a leg. I've got it as an F in the weekly chart, but it's gone to an F or a recycle B. Unbelievable. In the monthly chart, it's very strong. Raytheon, you remember I said the other day, I made a mistake. I did pull back sharply, 222 to the 205 area. Hey, that's one of the biggest moves down it's had in quite a while. And then boom, it just rallies back again. This is on fire. It's definitely in play. So Raytheon's acting very well at 225.57, up 48 cents. Here's an interesting statement. This is the strongest day in the NASDAQ since March the 9th. And will this rally continue? Okay, so I just discussed that. Let me just go back to the Qs and tell you what I'm looking at. In the Qs, if this is a leg C, there should be a D. If there's a D, that should take the stochastic from 70% into about the 74, 75% area if it continues running like this. But if it starts to hold it at the 80% level in the stochastic for more than 3 sessions, you will sustain any pullbacks. If it reverses back sharply into the 70 or 68 area after going higher, that says, uh-oh, be careful, you could get a sharp reversal in the Qs. But I do think right now I'm anticipating at least a D to the upside. Next question, here we go. The XLE, which is energy. Yep, nice, good question. Up 11 cents. Look at this vertical move. This is really something. Very quick, very strong. I do not ignore moves like this. It tells me that I've got to look at the monthly, and the monthly says, hey, peak C1, C2 in the monthly chart of the XLE. This is the S&P. Select Spider Fund. Select Spider Fund. There it is. This is good action. It held that downtrend line that it broke out. There's a Chapman wave inside track, repellent zone. Now it's a support zone. Hey, this is good action. So the XLE, so the next question was, what about the OIH? And the OIH at this point is up 12 cents, had a huge spectacular move in leg C. peak C, high-level consolidation. I suspect that you've now got a range for the ORH, the Oil Service Market Vectors ETF, between 2660s on the upside and major support of the 200 period and the 9 period moving average in the mid-25s, 2550s. Hey, nice action on the OIH. I'll be right back, Basil Chapman. Take more of your questions as soon as I return. And the Dow is up 223.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
Folks, we're back. Just really briefly, let me say that you've got webinars coming up. You've got Larry Pesavento next week. Check out the front page of TFNN. We're all about education. Yeah, I think we've all given some really outstanding webinars. They are very beneficial. We hear from a lot of people about them. Steve gave one the other day. It was tremendous. And congratulations, Steve, on being #1 timer and also getting a really great entry point on some positions. Very good. And we've now got Greg in Austin, Texas. Greg, how are you?
Hey, I'm well. How are you, Basil?
Very well, thank you. Your question is?
Oh, I was just going through some different charts here and came across Sprint and had quite a day back on the 10th.
Yeah, that Dave White, I believe, had that, and it was a fantastic call. Wow, we got some great people here at TFNN. Yes, 605 right now, up 21 cents. Are you looking at this as a potential buy or what?
I am, and so I was wondering if you thought it might pull back a little bit. It looks like it's got a lot of support right there, like 602.
So before we run out of time, let me just say, I've had my eye on this one. Before it had the big move, only because I kept pressing S instead of the one that I really wanted, which is starts off with an S, and it kept coming up. And then when I saw it had the spectacular move, then I heard that Dave White had his subscribers in it. And I thought, wow, that is great. Now, what I'm going to say to you is that it was really important that today you saw a nice bounce from the green candle yesterday after it hit the 640s and pulled back sharply to the 570s. If you're interested in this, there has to be a story involved. I think there's something about a takeover call or something. What I am going to say to you is, if you're interested in this at 606, I would actually nibble at this right now. The fact that it's held so well over the last 2 days, but I would not get carried away because it's had that big move. It needs another story. But just in terms of getting a good feel for the stock, just to start a small position at 605. Why? If there is takeover talk, or so whatever it is, then what it's got is a real good base of support in the 570 to 560 area. And that says that any surprise should be to the upside if it holds and it has that cushion. So it's a little late in terms of getting it in the fives, but at this particular point, if you just start a position, it's going to give you a good feeling within 3 days how it's holding, or is it going to go to leg D above the high of the other day? I hope that helps you, Greg.
Great.
Okay, we'll be in there. Let me know how it goes.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.